Hi there. Welcome to lesson number 4 of the Modelix Financial Planning Masterclass. Today, we talk about employee cost forecasting. There are 3 primary methods for estimating your employee costs. Method number 1 is number of employees multiplied by their average salary. Method number 2 is percent of revenue. And method number 3 is a driver-based forecast. Now, let's deep dive into each one of these separately. Method number 1, number of employees multiplied by salary. Let's say you want to calculate the employee cost for your sales team. You would forecast the number of employees that you will have in your sales team, and then you will multiply that number by the average salary per sales employee in order to calculate the employee cost for your sales team. This methodology is most suitable when the employee salaries are fixed, so you can have the number of employees multiplied by a fixed amount of salary. Method number 2, percent of revenue. Here, you calculate the employee cost as a percentage of your company revenue. Now, this methodology is most suitable when the employee cost is directly proportional with the revenue that you generate instead of the number of employees that you have. Now, for example, this will be great for a sales commission or calculating your employee cost for your sales team if they are paid on a sales commission basis as a percentage of the revenue that they generate. Method number 3, driver-based forecast. Now, driver-based forecasting is an advanced forecasting methodology, which is the most suitable for high-growth businesses. Why is that? Because as your business exponentially grows over time in the future, you need to be able to automatically calculate the number of employees that you will need in the future as your business grows. So let's go through an example. Let's say if you want to calculate the employee cost for your sales team. You would start again with calculating the employee cost by estimating the number of sales representatives that you need, and you would multiply it by the average salary of a sales rep. But now, in order to calculate the number of sales representatives that you will need over time, you would calculate based on 2 specific drivers that influence the number of salespeople that you will need. And this, for example, could be the number of clients that you expect to have over time in the future, and then the capacity that each sales representative can handle in terms of number of clients. So you calculate the number of sales reps by estimating the number of clients that you'll need, dividing it by the capacity per sales representative, and then this will give you the number of sales reps. Then multiplying the number of sales reps by their salary will give you your total employee costs for your sales team. See, it is important to forecast your employees based on the drivers that influence the number of employees that you need, because in a high growth business, you cannot just start plugging in number of employees in the future that you might think you need. You will need to set up a specific calculation formula based on the drivers that influence that number in order for your forecast to be more accurate and more defensible. Now, once we have decided which one of these 3 methodologies we're going to use for calculating your employee cost, it's time to define the values for your assumptions that will go into your financial model. When defining assumptions, there are usually 2 sources of information that you can use to define the values of your assumptions. Number 1, and always the go-to place, is historical financial data for your business. What are the salaries for the specific type of people that you used to pay in the past? So you can use that same number going forward, increased by inflation, and for any capacity numbers that you have used to calculate the number of employees, you can benchmark those capacity numbers based on historical data that you have in your company. If your business is new and it's not operational yet, then the better source for information is competitor and market benchmarks. Again, how many employees do your competitors have for doing similar tasks? How much are their salaries per employee? What kind of capacity numbers, driver benchmarks that you can find for your competitors? So you benchmark your forecast based on competitor and market benchmarks. And usually it should be a combination of both methodologies. you look at your own historical data and then you compare it to market benchmarks to ensure that you're in line with the market. Now, let's see how forecasting employees works in Modelix. This is Modelix. Let's calculate the employee cost for our sales team within Modelix. We'll click the Add Employees button. We'll give this team a name. So we'll call this the sales team. Then we need to define the function for this team. Is it a sales and marketing function, research and development, general administrative, or direct labor? In this case, this is a sales team, so we'll leave it at sales and marketing. Next question is, how will you enter employee salaries? Now, the options are dollar value per employee, or salary per employee, basically, a percent of revenue, or a percent of specific revenue stream. In this case, we'll use a dollar value per employee methodology for calculating our employee cost. We'll click next. Now, what we need to do is define the number of employees that we expect in the future, and after that, the cost per employee. So let's say we expect to have 2 salespeople in the first year, and then we expect that number to increase to 3 in the following year and 4 in the year after. We click next. Now we need to define the cost per employee, or the gross salary per employee. Let's say we pay $3,000 per month to these employees for the first year, and then we expect some increases in salaries. So let's say 38,000 in the coming year, and then 40,000 in the following year. Now that we have defined the gross salary per employee, we click Save and Close. And that's it. Our employee cost for our sales team has been calculated based on the number of employees that we inputted and the gross salary per employee. Now, previously we talked about actually setting a formula to calculate the number of employees instead of actually writing the number of employees that we have in our financial model, because we want to calculate the number of employees based on the drivers that influence the number of employees we will need to hire in the sales team over time as our business grows. So how do we do this in Modelix? We'll go into Edit on the sales team screen, and then we'll click Next. Now, instead of inputting the number of employees that we expect to have in the future, we will set a formula by clicking this button, Set Formula, up here. Next step is to define the drivers that will influence the number of employees that we will need to hire. And these drivers, in this case, will be the number of bikes that we sell, because our current business is selling bikes, and then the capacity that one sales representative can, the number of bikes that one sales representative can sell. So we click Add Driver. You can create a new driver or select from existing. Because we already have in our model the number of bikes that we will sell, first we'll click on Select Existing, and we will search for the number of bikes. So this was the unit sales driver in bike sales. We'll select the driver, then we'll add a new driver, which will be a new driver, create new, and this will be the capacity per sales rep. This will be the number of bikes that one sales representative can sell. The data type of this driver is a number, because it's a capacity number, and then the category is sum. What is the category? Just a quick explanation. The category selection just tells Modelix whether the monthly input that you put in for the first year, whether it should sum it up in order to calculate it for the full year, or should it average it in order to calculate that number for the full year. So in this case, because it's a capacity per sales rep, it's a sum type of driver. We click Create, and now we have defined the 2 drivers which will influence how many employees we will need to hire in the future. Next step is to set up the formula. So the number of employees will be equal to the number of bikes that we sell, or the unit sales, divided by the capacity per sales representative. We click Set Formula. Now, the number of employees in our sales team is not anymore an input. It is a calculation from the unit sales and the capacity per sales rep. So the unit sales, they are automatically pulled from our revenues. And our capacity per sales rep, let's say it's one sales representative can sell 500 bikes per month and 6,000 bikes per year. That's it. Now our number of employees has been automatically calculated based on these 2 drivers. We click Save and Close, That's it. We have linked our number of employees to the sales that we expect to generate in the future. So now if we go into our revenue and we change the number of units that we expect to sell, let's say in the following year, let's say we expect all of a sudden to sell 100,000 units and then 150,000 in the following year, automatically the number of sales representatives that we need, it increases. So you have a fully dynamic, interconnected model based on the drivers that drive your employee cost, which is the number of clients or the number of bikes that you expect to sell. That's it. Now that we have forecasted our employee expenses within Modelix, the last step before we're done with our forecast is to actually sense check the quality of our forecast. So how do you sense check your numbers? There are three main ways to sense check your numbers. One is to compare your assumptions to your historical data of your own business. Always the number one place the go-to place for existing businesses. Second source of information is market benchmarks. You can benchmark from your competitors the salaries that they pay to different types of employees, the productivity drivers that they are able to achieve. How much is your employee cost as percentage of revenue? So market benchmarks would be the second source of information for you to sense check your forecasts. And number three, if you had developed your financial forecast based on your employee forecast based on specific productivity drivers, then you should benchmark your productivity drivers with past historical data of your company and as well market benchmarks to ensure that your forecast makes sense and they're defensible when you try to explain them to investors, board of directors, or anyone you're presenting your financial model to. Finally, some questions that investors might ask you about your employee projections. Question number one: how did you calculate your employee costs? And here, as long as you've used one of the methodologies that we explained in this session, whether it's the number of employees times the salary or percentage of revenue, or you've used a specific driver-based formula, you should be able to explain the methodology that you have used to logically calculate the number of employees and the employee costs in your financial model. What are the basis for your assumptions? Again, make sure they're comparable to your historical data or to market benchmarks. And for sure, you're going to get asked the question, how does your assumptions compare to benchmarks? As long as you've done your work, you've compared your assumptions to benchmarks, this should be pretty simple to explain. That's it when it comes to employee forecasting. I hope this lesson was helpful. Stick around for the next session, which is going to be around forecasting expenses. Have a great day.